So I think it's pretty clear today was not exactly the greatest day for Tesla or the broader markets. Now, things could get a whole lot worse from here. What am I expecting? What do I think is the worst possible scenario? What do I think is the best scenario possible here? We're going to get into that. I think most importantly, forget my opinion, watch the money. Or as Elon recently said, follow the money. And that's a direct quote that he put out on his X account. You need to follow the money. You need to watch the money. And the money today, well, it's not sending you the greatest signal. So I'm going to give you guys the latest developments in this Israeli conflict, what could be coming next for our equity markets, why this time, infamous last words, could be different. Now, I also want to give you guys an update on how I'm hedging my portfolio, how we are hedging our portfolio in the trading community. I think this is important right now. If you're a trader, investor, if you want to hedge your portfolio, essentially. So I'm going to share with you guys what I'm doing. I mean, there's still plenty of time to hedge if that's something you guys plan on doing. If you guys want to come trade with us, get notifications every time I hedge out my portfolios. If you like some of these trades, link down below in the description of this video, but that's neither here or there. Some of these things we have to talk about are not exactly great for the markets, for your money, for the world, and ultimately for your portfolios. On top of that, we are also going to talk about Tesla earnings. In spite of this new information, has my stance on Tesla earnings changed? Do I still expect a rally into the 300s? Or do I expect a fall from here? We have all of that and much more for you here in this video. Some words from Nick Timiraos, seen as the Fed speaker, as well as some very other interesting things to get into here in this video as well. So I'm not going to waste too much of your time here on the intro. Hit the like button if you own Tesla stock, if you like Tesla stock, or you just like me and want to stay up to date with all of this information. As well as that, subscribe to the channel if indeed you want to follow these videos every time they are put out. You can hit that notification bell as well. Sometimes YouTube sends out notifications, sometimes they don't. Sometimes you actually have to come search for these videos, but hopefully you feel a little bit smarter after watching this video. Let's get into it. So it's no surprise Tesla stock closed down over 2.5% red today. It was not a great day for Tesla. Did any company-specific news come out? No, absolutely not. Tesla had no bad news to speak of. If anything, we had slightly good news. But if you follow the money, it's telling you something. And what we've seen today was very, very negative. Number one, gold. We talked about this in the last video, so I don't want to stay on this topic for too long. Gold was up 3.21% today. Look at this move higher in gold. I mean, this is almost unprecedented. A 3% rise in gold, 3.2% rise in gold. You didn't even see anything like that during the banking crisis back in March when literally people, I mean, your money could have been gone out of the banking system. You still didn't get over 3% increase in gold in a single day. This is not great. Gold, bonds, these are really seen as your risk-free assets. These are your assets you want to own if, like I say, the dookie hit the fan and started spinning around. Gold and bonds are going to stay a lot cleaner than maybe your table or your, phone, right? For a very weird analogy. You want to be invested in these assets if things were to go bad. Long story short, let me save you the semantics of all of this. These are fear assets. Bonds, gold, by and large, they're not going to make you rich. They're not going to do much for your life. But what they will do is hold their value at the very minimum. Your money that you put in gold today or treasury bonds today should be worth the same or more down the line, especially if the economy gets worse, the global situation gets worse, and that's why people buy them. It's not because they're all of a sudden super bullish on gold's prospects and supply and demand. It's not that, okay? U.S. debt is not exactly the best thing you want to own either. Look at what we've done with our fiscal position over the past 20 years. These are safety assets, as simple as that. 30-year Treasury yields down about 10 basis points today. This is almost half of a rate hike or a rate cut. So it is quite a significant move down on the 30-year Treasury. The 10-year Treasury in a similar situation, down almost 9 basis points today. As I reported in the last video, you also seen some data come out today, and this data should have caused bond yields to move higher. So your 5-year inflation expectations came in at 3%. You were expecting 2.7%, so that was higher than expectations. And your 1-year inflation expectations came in at 3.8%. You were expecting 3.1%. This should have caused the markets to say the Fed is going to be higher for longer and maybe higher forever. This should have caused bond yields to soar. It did not. The fear move won today. As simple as that. Now, apparently, Doctors Without Borders says Israel gave Gaza City Hospital only 2 hours to evacuate. They said, quote, Israel has given Al-Awada Hospital just 2 hours to evacuate. Our staff are still treating patients, they wrote on their X account. This is coming at any time. The invasion, incursion of Gaza is happening. This is obviously not the greatest situation, but should it be causing U.S. treasuries to fall when you're getting very inflationary data? I don't think so. Obviously, again, the markets can handle bad news. The markets cannot handle uncertainty. This invasion of Gaza that is about to be happening literally any time, maybe by the time you guys are watching this video, it has started. It opens the door for a larger conflict. Now, this time, why I think the potential downside in the markets could be 10, 20, 30% due to this conflict if the U.S. were to get involved, if Iran were to get involved, and maybe other countries in that region, Hezbollah, just name them, right? If they were to get involved, especially Iran, this could have dire effects on our economy. U.S. Treasury Secretary Janet Yellen, says, I am not seeing major economic ripple effects from the conflict. When Janet Yellen says something like this, you need to pay attention. She makes comments on these things when things are already bad. They were saying the banking crisis was taken care of when SVB went down. What happened? First Republic went down. A couple other smaller banks went down as well. First Republic's probably the most notable, as well as SVB. Hundreds of billions of dollars of assets under management. Poof, gone. After Janet Yellen started saying things were fine. Usually when they say things are fine, they're not fine. And I don't think you need to have a tinfoil hat for that one. But the real problem is, I've said it like 20,000 times, so I hope that everyone can understand. Like someone just comment down below in the comments of this video and say, we understand 30% of the world's oil goes through the Strait of Iran. Just comment that and like it. I know someone's going to comment that down there. Because I want to know if you guys fully understand this. That's why this conflict could get bad for our markets, for the economy. If we were to get into a situation with Iran and they wanted to cut off the flow of oil, or a portion of it, that could cause gas to hit $10, $15, $20 a gallon. Don't think that couldn't happen. That's why this conflict is a little bit different than the Iraq-Syria wars or, other conflicts that have broken out on a financial basis, I guess. Because it could literally stop the economy. What does the government do at that point? I was just talking to my mom about this, and she's like, yeah, there's just no way you'd be able to do anything. I mean, nobody's going to do anything if gas is $10, $15 a gallon. Well, what's the government going to have? Their government's going to have to subsidize that. Government's going to have to do something, or you're going into not even a recession, a depression at that point. You're going to have a national security crisis on your hands. That's how, volatile this situation could be. Odds are that does not happen. Odds are, hopefully, that's just not even a possibility. Hopefully. but there is a chance. Israel's Prime Minister Netanyahu says Israel's counteroffensive in Gaza is only the beginning. Again, that's kind of my point that I've been making, that once you actually go into Gaza, you create a situation where it's kind of like a door opener to a larger conflict with other countries to kind of try to save their people, right? Save their ethnic group, if you will. Gaza's no longer going to exist one way or another. So if other countries don't like that, that's where the situation can escalate from there. Now, Nick Timmerhouse, this one caught my eye. He says Philadelphia Fed President Pat Harker, an FOMC voter at the next two meetings, is firmly in the no more hikes camp. Quote, "We did a lot, and we did it very fast. The workings of the economy cannot be rushed. By doing nothing, we are doing quite a lot." A lot of Fed speakers have changed their tone recently because of bond yields going higher. And again, today they're going lower. That's because investors have been more kind of fearful on rates being higher for longer, higher forever, essentially. Well, this really threatens that. If you start to see a real conflict breakout, then obviously your yields are going to fall. And depending on the course of energy, that could be a real driving factor to slow down the economy even more. So on one hand, the uncertainty around this, on how big this conflict could get, is not good, right? Who knows, what kind of capabilities Iran could have that we don't know about. That's where a lot of the uncertainty comes from. And again, the effects of energy. And the markets hate uncertainty. Just can't handle uncertainty. We can handle bad news. We can't handle uncertainty. But on the bright side of all of this, that means the Fed is basically done. Fed's basically done raising rates at this point. There's no way the Fed comes out and raises rates again. Now, in terms of Tesla, I think it's important to point out that Tesla held its 50 and 100-day moving average through the close of the day. Now, once after hours fully finalizes, after hours ends at 8 o'clock, obviously the situation could be a little bit different. Tesla stock could be slightly above, slightly under. Point is, regular trading, you closed above your 50 and your 100-day moving averages. That's good news, or like right at those moving averages. That's really good. If you look at something like the NASDAQ, not really in a similar situation. The NASDAQ closed towards the lows of the day under its 50 and 100-day moving averages. There was not a lot of respect at those moving averages. That means there's probably more downside to come. Around that 350 level is probably where you're going. If this situation just gets mildly worse, what I mean is Israel invades Gaza, Iran or Hezbollah starts making threats, maybe Hezbollah gets involved and Iran starts making threats, then you're almost certainly going to head down to that 200-day moving average. Almost certainly. That's a problem. That's a big problem if that happens. The financial implications of that could be massive. Now, the worst possible outcome, if we were to get into an active conflict with Iran, they cut off the flow of oil in their territory and region. Like I said in the last video, you could fall back to your October lows, and that would be pretty reasonable. That would be a 31% fall from here. Now, I don't think this happens. I don't think Iran wants a problem. But if you could fall 31% just to get back to your October lows on the NASDAQ, I don't care if I'm wrong. I don't care if I'm right. I hope I'm wrong. I hope I'm wrong. Let's be honest here. I don't want to be right. And I don't think I am going to be right. But I think, again, the chance of being right is too high to not bring it to your attention. And subsequently, you could hedge out your portfolios now, Monday, next week. It doesn't matter. There's a lot of room for downside. That means there's a lot of room for potentially hedging and protecting yourself. If you're in that scenario where you kind of need to hedge yourself, hopefully this information finds you well. And again, I am not a financial advisor. I am not a financial planner. The trades I'm about to show you, my personal money's on the line. I don't want you to copy these. You'll likely lose money. I'll just give you the disclaimer. About 85% of options, a little bit more than that, expire worthless. So you have to be, think there is a reasonable degree of risk out there to be hedging the way that I am hedging. But with that being said, it can protect your portfolio. So that's kind of your worst case scenario. Like I said, we'll get into the trades here in just a sec. Again, a median scenario, what I could see is about that 200-day moving average at the bare minimum. That's kind of what I expect. You could overshoot that down to maybe 320 on the NASDAQ. That wouldn't surprise me. Anything under 320, then you probably have some really bad things happening with this conflict. And again, if you follow the money, it's not good at all. Okay. And that's where a lot of this comes from. If big money was not freaking out, I would not be making this video. That's the bottom line to it. If big money was not freaking out and doing what I'm telling you, essentially, big money's not making these YouTube videos. Big money is doing this. I'm just relaying the message. Don't shoot the messenger here. I'm just the guy relaying what big money is doing. And they're probably not going to like that because that overcrowds their trade and their hedges. But I'm not going to leave you guys ill-informed. Now, the problem is I see very little chance of big upside from here in the NASDAQ. Especially after the last couple of days, we've kind of just ripped higher. I think that allows a little bit more room for that downside move at this point. Now, briefly on Tesla, nothing changes. Okay, I still expect the Cybertruck delivery event, maybe this weekend, more than likely on Wednesday, Tesla's earnings call. That's what is going to drive Tesla stock higher or lower. Stocks can still do well in a bad market, to some degree, at least initially, when they do get good news. Look at a Dollar General. Dollar General just got really good news. Dollar General stock was up 10+% today. Tesla stock could do something similar. If they gave us good news about the Cybertruck, good forward-looking kind of guidance on the Cybertruck. Is that guaranteed? Obviously not. If you look at the technicals, Tesla's holding up a lot better than the broader markets. Again, above its 50 and 100-day moving averages. Looking pretty dang good on the charts. And again, if you break above 265, that could fuel some shorts covering on some of their short positions heading into 2024. If they are proven wrong about just Tesla and Tesla's growth story, then you get shorts covering, then you get a move into the mid 300s. Keep in mind, this level on the NASDAQ that I was talking about, these August 2022 highs, well, those highs are like what on the NASDAQ today? That would be a fall of like 9% from here. Tesla stock would still need to rise from here about 25% just to get back to the August highs of 2022. So Tesla is a beaten down dog stock. Still, I mean, lower than where it was 18 months ago, by far. So I think there's maybe a little bit greater of a chance Tesla rallies there. And after all, Tesla stock is conditioned for this bad news. We've seen bad news. We've seen bad numbers, bad margins. It's not a huge surprise at this point. The markets, again, can handle bad news. They can't handle uncertainty. Use this in context of Tesla as well. I mean, Tesla's margins were coming down. Tesla was cutting prices. That wasn't the problem. The problem was Elon didn't say that was the last time. There was uncertainty whether or not he was going to do that again. So the markets just don't know what to do in that scenario. So that's a big thing you want to be watching. The uncertainty here. If uncertainty does rise because of something Elon says or whatnot, then you definitely want to be watching that. But I do expect very bullish things for Tesla's numbers and for Tesla's earnings call and their forward-looking statements. But again, Tesla's numbers don't matter all too much as long as nothing is super shocking to the downside. Even if you get really good numbers that surprise on margin, surprise on a couple different aspects, the stock's probably not going to react too bullishly to that. It's all about the forward-looking statements, especially given what's going on here on the global stage, geopolitical tensions, as well as the expectations for Tesla being 27% delivery growth, 29% EPS growth. So Keep that in mind. Now, let's take a look at some of these trades. So, again, don't copy these trades. I'm not a financial advisor. I'm just showing you guys some of the hedges I have on my portfolio, what I kind of plan to do with them. So, here's this hedge. This is, by far my favorite one right now. It is QQQ, NASDAQ 100, 350 puts, expiring on November 10th. Okay. $1,000 is the current market value. I have 3 of them, up 54%, up $369 or so. I think, again, if things got bad with the markets, with the NASDAQ, these could become a couple $1,000s a piece. 1,000%, I'd be happy with that. That would be just fine. That'd be $1,000 into $10,000. That's a hedge in case all hell were to break loose in the markets. And I do think that is a possibility that I want to be hedged out for. The second trade that I have is QQQ, NASDAQ 100, 340 puts. And again, I just think if we're going to get downside, it's probably going to be in the NASDAQ. Your dividend stocks, your other sectors have already got destroyed. I think the last breaking point of this market is likely the NASDAQ. The S&P has fallen way more than the NASDAQ. So that's where I personally want to be short. And I'm actually down 10% on this trade. They expire November 10th. This is a smaller hedge, but down 10%. My average cost of $204 a piece. These suckers are going for what? Currently going for like 203. So not every hedge is going to work perfectly, but these hedges also cover you for the next couple of weeks of earnings, and I think that maybe will help them hold up a little bit more in value. Now, this is one I really like as well. It has a really high risk to reward. The risk is really high that you lose all of your money. The risk is low, but possibility that you make a lot of money. Now, this one is an Apple. 145 to 140 puts. This is a debit spread. So I'm basically buying the 145 puts. I'm selling the 140 puts in the same transaction for $8 a piece. I'm up $40. I did this 40 times. So your max gain is 40 times 500, right? Because every option is, once you're in the money $1, an option represents 100 shares. So every dollar you go into the money, you make $100 per option. So max profit would be Apple closing under 140 by November 17th. And again, that would just be if the markets went through a really bad situation. Let's just call it that. And your max gain would be 20,000 minus what I paid of 300. What I pay? Like 280? No, 320. Paid 320 minus 320. Your net max gain would be about $19,680. Again, I don't know if this is going to happen. I don't know if these are going to hit, but if fear really does set in and all hell does break loose, I want to be some degree hedged. So, maybe 2-3% of your portfolio. That's about what this is. Maybe a little bit less. For some big potential upside here. Again, I hope I'm wrong. I hope these things expire worthless, or I hope the sentiment changes in the markets. The situation in Israel changes. Iran fully backs off and doesn't do anything, and Hamas doesn't do anything, and all things are fine and dandy. The U.S. does not get involved. But there's a chance, if you take a look at big money and what big money is doing, the situation does get a whole lot worse. Again, by big money, if you guys haven't realized it by now, TLT, treasuries, investors are buying the bonds, even though we had way higher inflation expectations on the 5 and 1 year ahead outlook. That shouldn't happen. That should have caused yields to at least stay flat, if not go higher. Justifiably so, they should have went higher. So that's not great. Money's flowing into bonds when it shouldn't be. Oil was up 5.5% today. We should probably point that out as well. If the situation did get worse with Iran or any oil-producing country, well, that's obviously not great. And GLD was up about 3.2% today, which it's been a very long time since you have seen a move like this in gold. So it's a risk move. It's a risk aversion kind of day today that you've seen. Investors want to get rid of risk. They want to go into risk-free assets, which is GLD in this case, and TLT, your treasuries, when it doesn't really make a lot of sense to actually do so right now, given inflation, given, what the Fed's course ahead is for Fed policy. So that's going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Let me know if you are hedging your portfolio, what you guys think of these hedges that we have out, and just share the information. Again, I'm not a financial advisor. I'm not a financial planner. Subscribe to the channel if you guys, again, want to stay up to date with all of this information. Link down below in the description of this video if you guys would like to come join the trading community. But that's it. You guys enjoy the rest of your day, and I will see you in the next one.